With regards to the comments made about Walmart, it seems that they are starting to gear themselves up for new competition within the market. Do you think that there is going to be quite a massive shake-up within the space? And we're looking at South African manufacturers under pressure as well.
Yes, I think the entry of Walmart will be keenly watched. I do think, though, that when it comes to ShopRite and some of the other retailers and their mix towards perishable, fresh produce, they should be relatively resilient against Walmart. Most of the pressure will probably come in general merchandise, furniture, big-ticket items, and non-perishable foods, your canned foods, for instance. And in those areas, I think Walmart will be a very big competitor, but ShopRite seems to be ready for them.
And ShopRite, market didn't like the numbers today, clearly, down 2.7% in today's session.
Yes. Look, I like the numbers, and also it was a 53-week period versus now a 52-week period. So the like-for-like performance was even better than the reported numbers. But it is trading at a high valuation. So even though the numbers were good, when your share price is trading at the type of levels that ShopRite's is, you not only need to come in line with expectations, you need to exceed expectations by quite a large margin. And in a general day where the markets were down, I wasn't surprised to see the share price coming down, even though the operational performance was quite good.
Okay, one company also out with a trading update, and just before the close of trade, the stock down 0.5%. Stefanuti Stocks, of course, saying that headline earnings per share for the first half could be as much as 30% lower. Again, just bad news out of the construction space.
Yes, no, it's a continuous trend from the likes of Murray & Roberts, Group 5, Avenge, and some of the others that we have seen. And I think even though these shares are down and out, the negative trading updates we are seeing coming from them shows that it could be a while before we have a turnaround in their prospects.
And the JSE All Share, actually, let's touch on that story. Technical issues again. Markets closed for half an hour.
Yes, between about 10 to 4 and 20 past 4, the market was down. When I left the office, the reasons for it weren't communicated yet. In previous times, the JSE said it wasn't their system, it was the link. The cables that were cut or something in that to that extent. But whether it's the cables or their system that they're now soon going to port back to South Africa to be hosted here, it isn't great, and I'm sure the brokers weren't happy because they lost out half an hour of brokerage income.
Absolutely, and I actually haven't seen anything coming through from the JSE, but I am keeping a close watch on that. Harmony up 2.2%, SAB up 2%. We had Goldfields shedding 4.3%. Harmony's had a bad run. But we know that it's the Papua New Guinea story that has come through, and the likes of Goldfields down under significant pressure, 4% in the red.
Yes, and that's on the back of the dollar gold price coming down, and you now have more and more participants saying, well, maybe, just maybe, this run up in gold to above $1850 is too high. Maybe we are seeing a bubble. And if you look at the price action, it looks almost like a hyperbole where the momentum has just taken gold far above where a lot of people would have expected it to trade. So if we are in bubble territory and there could be a correction, these gold miners aren't in a great position. Just also, I mean, if you go back 12 months, a lot of these gold miners, the share price is at the same level as a year ago, while the gold price is up strongly. So it shows that they haven't benefited from a higher gold price. Okay,
very quickly, Jean Pierre, where are you finding value right now in the market?
Well, we have struggled. Some value is coming to the fore now, but we're definitely positioned more conservatively in high value, in high blue chip, high dividend paying stocks.